Hey everyone, I'm Charting Man Dan with the Chart Guys. I've been making trading and technical analysis content on YouTube for a decade at this point. We're going to check in on the markets, and we had a strong start to the week and a very weak end to the week. There's a lot of weekly bear flags out there. We're going to look at a couple little trade reviews and where we stand with some head and shoulders patterns we're keeping an eye on as well. Reminder, we're in the last couple days of our swing report, half off for a month to check it out. Again, a weekly publication sent out for those that don't have as much time to sit in front of the computer all day, where Lamont uses volume profile to highlight some trade setups. And we did a webinar this past week where we went over how he does that. So I linked the webinar in the comments of this video. Check it out. All right, so I'll do some trade review at the end of this video, mostly Tesla, day trades. We'll go over some that went well, some that didn't work. But first, we've got weekly bear flags on the table. So we know the market is looking towards April 2nd, which is this coming Wednesday. And we're going to be looking at the tariffs going into effect. And you could look at the market this past week and say, Trump talking about auto tariffs and all this led to further weakness. Obviously, the market doesn't like uncertainty and all this back and forth. Is it a buy the news event? Because it is known that they're coming on this date. It's always a possibility. I think back to one of what I am proud of is my better calls with looking at the invasion of Ukraine being a buy the news scenario, because the market was told again and again and again, it's coming, it's coming, it's coming. And then the day of the invasion marks a bottom into a very significant bounce. The difference here is the bear flag, where I would be more confident calling it a buy the news event if we were doing this leading into the day. It's still possible, but I don't have as high conviction. So I'm going to be keeping an eye out for it. But again, this is a weekly bear flag that's on the verge of confirming. We look at the bounce retracement size, and we know it was insignificant. We got right up to the 382, which is our bear flag guide. We know the bulls needed 50% plus. Again, we headed into this week saying, is this going to be a weekly bounce that is a tightening range with a 50% plus bounce retracement, or is it going to be like the start of 2022 where it was a weaker bounce and we confirmed the weekly downtrend? And it's looking like we're on the verge of confirming the weekly downtrend. Both the S&P 500 and the NASDAQ will both have to break. The NASDAQ is closer to breaking because it is the Magnificent Seven and major tech names and semiconductors that are leading the way down in this weakness. So last week's video, I was bullish in the short term, looking for this range to break into a weekly bounce. Then we know the weekly lower high is the most likely scenario. I was hoping the bulls would get a little bit more follow through, but weekly lower high is now set. So what's going to be key from here is, of course, the support that we're testing. So that's going to be first thing this coming week for the NASDAQ. And then the next most important thing for me, again, check marks. What do the bears need? What do the bulls need? The two things that the bulls needed last week didn't happen. Well, we had a few of them. We'll look at those in just a moment. But what the bears need is obviously to break support, but to confirm a daily downtrend as well. This is a straight drop coming from the high of the bounce at this point. So bears do want that lower high and lower low next time we do bounce. And again, looking at the S&P 500, we can see we have a little bit more space to work with, not by much. It's very similar, but some of the sectors holding on a bit better, financial sector, which is keeping it a little bit stronger. So again, the check marks for the bears this coming week: break weekly support, confirm a daily downtrend as the result of the next bounce. If we don't do that, it's going to be a bear flag with no follow through. If we break support and then significantly bounce and don't confirm a daily downtrend, we're going to look for that to be a bull signal. But as far as the things that the bulls failed to do, so heading into this week, what the bulls did do well is they broke resistance first thing. Okay, great. We had a wall at the top of the bounce that broke. We had the Magnificent Seven, MAGS, the ETF. They broke their 4-hour range bullish. And we had those things. What didn't happen, what still had to happen that did not, NVDA did not break resistance to confirm a daily uptrend. That was the biggest red flag for me, because that's obviously going to weigh on semiconductors, which is going to weigh on the NASDAQ if NVDA can't break resistance. And it didn't, and it rolled over. So that was a notable red flag. The other thing that was key that bulls did not do is hold the back test. Bulls really needed to hold the back test of the 4-hour previous resistance as support, and they failed to do so. And so that was a red flag as well. This is where bulls needed to make a stand, form a daily high or low here, and they tried and failed. Yes, we're oversold. That's not enough for me to be looking long right now. And my mindset on Friday, you know I love oversold bounces. It's one of my edges as a trader. But after the initial hour of trading, no longs for me today. Sometimes I have a rule where if all major sectors are hitting the lows together, I don't look long that day. QQQ, XLV, XLF. That didn't happen on the morning, but it was enough. You know, the bears controlled Wednesday significantly. Thursday, the bulls tried to bounce and failed. And then we start the morning really weak on Friday. That for me just says bears are proving it. And so no longs for me today personally. I'd rather wait for a big enough hourly bounce that I miss to convince me to be looking for an hourly high or low long. Bulls need to give me a reason to look long at this point because bears are winning. And being oversold is not enough. If you're in a back burner situation coming from a very strong breakout, then oversold is enough for me to be interested in a bounce. But not in this situation because that's not what we have. So oversold was not enough for me to be looking long. So semiconductors are weak. They're down testing the low as well. Again, NVDA did not confirm a daily uptrend. So many of these major names had nice bounces, but again, we put an asterisk next to a nice bounce that doesn't confirm a trend change. Amazon, nice bounce off the lows. Percentage-wise, you know, bunch of green days in a row to 9%. That's very worthwhile, but it's an asterisk. It's a solid bounce. We have not confirmed a daily uptrend yet. That has to happen. We have to see the higher low and higher high, and we didn't. So, red flag. Again, it helps us get from getting, too far ahead of ourselves. Bottoms in for Amazon. I would never say that without a confirmed daily uptrend. So Amazon failed a daily uptrend. Meta, again, nice bounce, daily stair step. Confirm the trend once we top out. Didn't do it. We're back down at the lows. So a bunch of these major Magnificent Seven names failing to confirm daily uptrends. With how I'm currently positioned, I still have a bit of a long lean in my IRA, more than I would like. Didn't reload enough hedge position in this past week, but still very comfortable with where it stands thanks to miners, which we'll look at in just a moment. Silver had a decent week, natural gas, but diversification helping a bit. Tesla. So Tesla overall stronger in the sense that we're not testing the low. So that's a good thing for bulls, but we had a bull flag attempt, essentially a double top, and then a break of short-term support. If you look at extended hours, we've got that range. We had the high, we broke it by $1, less than $1, so pretty much a double top. This is why we got to look at extended hours levels as well, and then we broke short-term support. So again, I'm trading, Tesla's my most profitable day trading name this year so far, and I'm trading it on a daily basis. And essentially Wednesday, Thursday, and Friday, I just traded it one trade every day, and that was my day. And we'll go over that again at the end of this video. But what are we looking at from here? First hourly oversold conditions finally being hit. It didn't get hit on this drop. Bulls bought the dip quick enough. But hourly oversold. Again, we're going to look for a weekly higher low attempt on Tesla. If the NASDAQ breaks bear without a ton of follow through, we'll look for Tesla to try and hold its recent low. So I'll be keeping an eye out for that possibility. There is also a gap to be watching at 249.52. So that's a potential bear target in the short term. And there's also, I think it's today, Saturday, where there's a national protest. We'll see what comes of that, but again, a known event. The financial sector. So again, there's a number of head and shoulders patterns where if the broader market is going to see another leg down of significant weakness, then these head and shoulders will have to confirm for that follow through. XLF is one of them on the weekly. This needs to be the weekly lower high, and we need to drop down and break 47.05. That's a ways away. That's 5% more to the downside. That has to happen if the bears are going to prove something on this chart. We've got healthcare, base of support right now the last 4 days, but look at the 2-day chart. It's a potential head and shoulders. If we're going to see a convincing leg down in the broader market, we will need to see XLV breaking 142.86 support to confirm this head and shoulders. And then individual names. Netflix is a potential weekly head and shoulders. If we're going to get another leg down in the broader market, this would drop down and break 854.50. So again, I care much less about Netflix when I'm analyzing the broader market than I do about XLF and XLV. But again, I got my checklist. What do bears need? I've already told you a couple things: break support, confirm a daily downtrend in the indices. But if we're going to follow through on that checklist for bears, is confirming the head and shoulders in XLF and XLV. That has to happen. If the NASDAQ and S&P 500 break their short-term support here, this recent low, and XLF and XLV, start the week with a little bit of downside, but we do not break this support, and then we recover, we know the S&P 500 is not going to see follow-through on the new low. So that's going to help me gauge whether more follow-through is coming, is how does XLF and XLV respond to this potential bearish pattern that's forming on the longer-term timeframes. Still keeping an eye on the quantum names. I just checked out, my most profitable day trading names in 2025 after the quarter's ending here, and it's Tesla, RGTI, PLTR, QBTS. So 2 of the 4 are in the quantum names, and RGTI weekly lower high set. For the most part, quantum names had relative weakness this week, and it was clearly a sell the news event into the NVIDIA Quantum Conference last week. And if this range breaks bear with a break of 703 on RGTI, then that is a clear equilibrium bear break. And we already have QBTS trying to break out, but falling right back into range. QUBT is just looking for a weekly lower high. Bigger picture with tons of space for it to form. IONQ, potential weekly bear flag as well. So obviously it's going to be dictated by the NASDAQ in large part, but still good volatility in these names. I've just been a bit more focused on Tesla than them personally in the short term. Dollar, weekly bounce underway, potential weekly bear flag. If you're bullish metals and miners like I currently am positioned, you definitely want to see that be a weekly bear flag at this point. And again, it's another example where, okay, decent bounce, but we haven't confirmed a daily uptrend yet. That has to happen if we're going to get any bounce follow through. So it could go either way, but at this point, it's a unimpressive weekly bounce here. We've got gold closing great. Daily bull flag confirmed, and we just keep having bull flags here. This is your ideal blue sky breakout. You got a weekly bull flag into continuation, and inside that, you got daily bull flags into continuation. So our new most important short-term support is now 3,000, holding that back test, and that's our guide. Hold that, and bulls keep full control. It's just how long can we stay in this breakout? And in my opinion, one of my questions this past week was, do metals sell off because there's less fear in the broader market and people start putting money to work thinking a bottom is in? This weakness this past couple of weeks, we could see gold is clearly, I should say past couple of days, we could see gold is clearly inverse to the NASDAQ the last 2 days. So again, that's part of my IRA diversification, not specifically in gold in the IRA, but silver, GDX, GDXJ. So I never like confirming a flag with no follow through. And the miners started Friday great for 20 minutes. And then the broader market weakness did have an impact and it wasn't able to escape it. And so again, I'm going to keep my stop where it is here to ensure profit, because if we were to confirm a bull flag and then lose the higher low support, that's a red flag for me. Flags confirming with no follow through can signal significant reversals. That's something that I've been working on recognizing more over the last 3 to 4 years, and I really like it as one of my improving strategies. So I'm going to remain protective. GDX, same deal. Great follow through to start, but got to be protective now because the broader market weakness does impact. And silver as well. Silver's still battling this decade plus high. We got right up to it in this zone on Friday, but struggling a bit. Got to break out convincingly above that level on silver. Oil, weekly bounce following through. We know there's a weekly lower high is the most likely scenario here. Held our base, scouting the weekly lower high. Bulls certainly hoping for another leg up against that retracement. Bulls want 50% plus retracement. And right now we're at the same retracement as what the S&P 500 and NASDAQ had before they topped out. So more is needed. The energy sector does have relative strength comparatively to a lot of other sectors. You look at this daily chart and say, are the markets falling apart? No, absolutely not. But obviously this is just the energy sector, but it's just fine. Solid move up, hit the highest levels on Wednesday, highest levels that we've seen all year, 4 months. No red flags on the daily consolidation at this point. So that is one pocket of relative strength. We'll keep an eye on that. And natural gas. So here's an example. I said, I'm going to put my stop on UNG under $20. We dropped down to 1991. I didn't stop out of my position. Why? If I was on vacation, if I was not on the computer screen, I would have stopped out right at that low. But I was on the computer every day, every morning. It's a half remaining position, and it's a position that's very profitable. So if I'm watching, I can give that wiggle room. 10 cents, 20 cents, 30 cents on UNG, half remaining position, means absolutely nothing in terms of what the outcome of this trade is going to be. And so knowing that natural gas was testing weekly EMA 12, and knowing that we didn't really see a break with any follow through, I decided just give it a little bit of a longer leash. And honestly, I was hardly even watching it, but I just knew we're not dumping through support. I don't need to exit this position. So that's just a little bit of, leniency in the moment. If it wasn't a profitable trade, I would have stopped out. If it was hitting my max red I would take on a trade attempt, I would stop out at the bottom there. So again, just a little nuance that because I have that profit cushion, I can give it a bit of a longer leash. Again, if we followed through and broke 2% below that support, I'm out. But it was just a tiny little blip. That said, I'm definitely watching for natural gas to potentially form a weekly lower high. And if we confirm a weekly downtrend, we know that monthly consolidation is then underway. So still potentially going to stop out. We'll see. All right, Tesla trade review. So my favorite trade of the week was just a standard bears, and this is look up chart guys, later morning trade strategy, because that is what this was for the bears side of things. And I use the later morning trade strategy fairly often with my day trades. So I missed the first drop down. And again, we don't have to trade the morning rush. There's definitely great volatility and opportunity in it, but there is the second later morning trade opportunity as well, oftentimes. So I missed 4% of downside. Oh man, what a jerk. But we know a 15-minute lower high is the most likely result of the next bounce. Bears have just shown us they're in control. They dropped the morning hard, and so I'm scouting this lower high. I'm using 15-minute EMA 12 as a rough target. That's one piece of the puzzle. We got right up to it, and that's when I zoom in and I look at, I'm having deja vu because I've made a Tesla trade review video talking about this exact same concept on the 15-minute and the 2-minute time frame 5 to 6 years ago on our YouTube channel. There's a Tesla trade review, multiple of this video. That's wild. But 2-minute. So if I'm looking for a 15-minute lower high, I zoom in and I look for the 2-minute trend to help me pinpoint that 15-minute lower high. And so in the chat room at that point in time, Tesla 2-minute rising wedge watch for a 15-minute lower high. So I was watching this pattern. Bull break straight into consolidation, bull break straight into consolidation. So I'm watching this. And I chose to short at resistance. I was making the assumption that we are going to shape up this rising wedge. So I drew its rising wedge is shaping up, keeping an eye on it, very close to 50% bounce retracement, which would have us looking for a 15-minute equilibrium, which is what happened the day before, shorted at resistance. So here's the rising wedge. I got a great fill shorting at resistance, I believe upper 278s. We topped out low 279s. So I short it there. We drop down this leg. We confirm the 2-minute rising wedge. I trim, I forget if it was a quarter or a third of the position. I trim some of the position and I stick my stop over the high with a little bit of wiggle room, and I'm now risk-free. So if I'm in 278.50 and we drop down to 276.50 and I exit a third, I can put my stop at that high just above it and be risk-free. And so then I just let it play out, and I ended up going outside and watering the garden and stuff. I'm either going to stop out, break even. Again, I love putting myself in a position where either stop out, break even, or have a solid win. And so the bulls fortunately never got a 15-minute equilibrium going. They tried to defend the low. They tried to get it here, and we rolled over. And then the bears controlled the entirety of the day, and I scaled out my last short position in the 267s into the close. I thought about swinging it, but I didn't want to in the end. Just wanted to start the next day with a clean slate, and glad I made that decision because we had a big bounce from there. But that was my favorite trade of the week, and it went very well. You know, two and a half day maker as far as what I aim for on a trade. Friday or Thursday, I had a long. I guess we'll do this one real quick, and then we'll go over a failed one Friday. So Thursday, and this one was, I was a little bit cautious because I was doing an interview on another YouTube channel, and I had just finished it. So I wasn't fully in the zone. And I looked and I saw, and this is where I posted a video on Twitter talking about how one of my edges as a trader is utilizing relative strength and weakness of the NASDAQ compared to individual names. Check out our Twitter from Thursday for that video, because again, it's the backbone of what makes me a successful day trader. And it was such a level up when I figured that out. But I recognize relative strength because Tesla was up in green while the NASDAQ was red. The NASDAQ 5-minute RSI was in the teens, I believe. And so my mindset was, if we're holding the low of the day on Tesla, if we're holding 1 minute support, and if the NASDAQ gets any 5-minute oversold bounce going, even if it's just a lower high, Tesla's positioned well for continuation. So I see this 1 minute candle double bottom at 270, 277, and I enter long in the lower 273s, or maybe upper 273s. And I then just stick my stop right under that low, because if that breaks, then I'm wrong. And so we get a new high of the day. Again, I chop a little bit off. I stick my stop under the low of the day, and I'm risk-free long now. And I did leave a bunch on the table because I was all out. This was another rising wedge, 2-minute rising wedge, and I was all out, scaled out of that trade by the time that broke bear. And this was a nice win. It wasn't the same win as the day before, which had a lot more follow through. Hindsight, could have left a runner and had a lot more of that upside captured, but hindsight's nice and easy. So that was a nice, short one day, long the other day, 2 solid wins, having a real good week. And then on Friday, a little bit frustrating just because I had the direction right, but I was looking at this to be a 2-minute bear flag on Tesla. And I noticed us struggling at 272. And so I shorted this candle in the upper 271s. And then I exit a third real quick on that quick little pullback. And then I stopped out, break even, 272.01. Then we rolled over in a big way. So, trade would have worked out, but didn't expect that size of a bounce before finally rolling over. In hindsight, because I stopped out break even, that gives myself, I can try that trade again, should have gone for this equilibrium breaking bear, tightening range, bear break at 271.25. But I was also very happy with the week, and it was a Friday and a nice day, and I was just done. So little insight into the day trading. Again, go checklist. What do bears need to do? What do bulls need to do? Bulls checklist is longer after how we ended this past week. We'll see what Tuesday brings. Remain protective. And again, game plan for both scenarios. Do we hold support? Do we break support with no follow through? Do we break support and follow through? Do good things. Thanks for tuning in. Good morning, Check Guys members. I'm keeping an eye on the futures 4-hour uptrend as our guide for full bull control.